I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle. This is the 235th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk Beaver Creek Conference coming up. Looking forward to catching up with a lot of you out there. We're going to talk interest rates. We'll talk gold. We'll touch on some lithium M&A. As usual, in the beginning of September, it's starting to pick up again. Nick, first and foremost, how are you today, sir?
Doing great, Gerardo. Got the kids back in school, starting to do the homework back into a routine. Looking forward to these conferences, as you mentioned. Looking forward to hunting season and putting the fishing rods away. And ready for fall, which is, I don't know if it's my favorite season. I like winter too, but fall's up there.
I like it. Let's get right into it. We have a dollar index over 105 now. Capital outflows persistently out of China into the U.S., pushing the dollar higher. But other macro factors at play. Thought on the dollar. I mean, gold is still holding up well above the 1900 level. Technically still looks beautiful. Psychologically still very boring for most speculators and investors out there, right? I see a lot of capitulatory type tweets on the Twitterverse, and that tells me I should probably be adding to my gold positions here in the near term. But thoughts on the dollar, thoughts on gold, and then we'll talk broader indices here in just a second.
Yeah, dollar strong because the Fed remains hawkish and is likely going to hike again, not this month, but in November, you're well over a 40% chance now, as that CPI is going to reinflate and is going to stay sticky in between 3 and 3.5% for the next coming quarters, simply because oil is now back over $85 and has gone up 25% in the past 3 months. So the market is pricing in the Fed continuing to be hawkish and fiscally responsible, and that's why the dollar is strong. What's interesting is. Now I'm going to digress because I had on the Bloomberg earlier while I was eating my lunch, and they were talking about how these wind farms are having trouble getting off the ground, even with the help of the Inflation Reduction Act. Because, you know why, Gerardo? Because the inflation is still so high that the prices for the inputs for the wind turbines are making it cost prohibitive. And the Bloomberg discussion was noting that perhaps even the Inflation Reduction Act was making it worse. How ironic.
You mean when they print money to bring down inflation, thereby injecting money into the system and then providing hundreds of billions of dollars in tax incentives to corporations, that actually causes inflation? It doesn't reduce it?
Right. And so
who could have guessed this? I mean, come on, Nick. How would they have known?
Well, inflation was going down for the past year. You will, of course, recall from 9% to, I guess, 3.1% was the latest print. But yeah, now that stimulus, well, that's not a stimulus, that legislative money, that incentive money, let's call it, from the bill is working its way through the system. And of course, that contributes to inflation as well. So to finish my thought from the Fed, likely a hike in November, I would say. I would also say that that's probably the last one because, Goldilocks has run out of the house and is nowhere to be found at this point. We just had a really soft August for the S&P. And then, we touched on this last week, but that consumer and the employment piece is really the last thing that has to go, right? Housing went, and we've talked about the hope. Housing, orders, like ISM, manufacturing has been below, new orders has been below 50 for the past 11 months, which is contractionary. And then profits, which we just had the second quarter earnings. The dust is now settled on that. And the S&P company's earnings growth was, in fact, negative, minus 4.1%. And that brings us to the E in hope, which is employment. And you're starting to see cracks there, right? The June number was revised down by over 100,000 jobs, I believe it was. The July number was revised down by 30,000 jobs, the non-farm payrolls I'm talking about. The August number was a beat, but then again, so was the June and July numbers, which were subsequently reduced way down. Q2 GDP was just revised down from 2.4% to 2.1%. And then you're starting to get a tick up in temp workers being laid off or companies not using temp workers. And so that's typically the first thing that goes, right? You you stop hiring temp workers or you cut back their hours, then you cut back your internal staff's hours, and then you lay off, right? So we're seeing the temp slow down now. Reuters had an article about it this week. Wall Street Journal had an article about it this week. And the line they're taking is that it's different this time, that this time a slowdown in temp work doesn't portend a slowdown and then the rest of the employment space, as it always typically does.
It's funny that that this time is different is always the same line. Isn't that ironic?
It's
the
funny,
most
man.
oxymoronic thing on the planet.
Right. So all those things cascading, right? Those earnings cascading down, those new orders cascading down, now trickling to temp work, and is ultimately going to get to employment. And my crystal ball says one more hike tips that over. We get that 0 to negative growth in Q4 and Q1. We get that recession that the yield curve says is still coming, and then the Fed has to capitulate, which will weaken the dollar and likely send gold pretty high. So you mentioned gold, and that's the last thing I'll mention before I give it back to you, is a correlation with the dollar relatively breaking down. Look, the dollar screamed higher for the past 3 or 4 weeks. Like, I was looking at daily candles, and they were all green for like the past 6 or 7 of them. I mean, going from 99 to 105 in a hurry. Yeah. And it didn't send gold down sharply. I mean, starting to move to the lower end of its range of 1920 or something today when I looked, but holding up well. And so, gold stocks and silver stocks, are they in the toilet? Yeah, I guess I was looking at silver and gold ETFs this week, and then they were near 52-week lows. So, gold going to the low end of that range we've been discussing, time to buy.
Let's talk. I'm going to be all over the place on this one because we have a conference to get ready for, right? Beaver Creek. I encourage anybody that's out there, as I mentioned in the intro, if you're out there, we'll be out there with our talented camera crew. Nick will be out there. I will be out there. We'll be vetting companies, speaking with companies, filming a whole ton of exclusive content for you all. So I encourage everybody, if you're a subscriber to the paid publications that you can subscribe to at digestpublishing.com, you'll get it first. The free sites, resourcestockdigest.com and dailyprofitcycle.com, will get it shortly thereafter. But really looking forward to that. If you're out there, drop us a line. It's a busy schedule. We're jam-packed back to back, but it should be a whole heck of a lot of fun. And there's always a lot of due diligence that goes on at these conferences. So I say all that to say this particular podcast will try to be 30 minutes or less, but I have to highlight Moss and Gold because we talked gold. And they had a 404-meter hit of 5.1 grams per ton gold equivalent. Just an absolutely spectacular hit from the Sunday Creek project in Australia. That's turning out to be the hottest gold discovery in Australia in recent memory. And look, it's their subsidiary, SXG, Southern Cross Gold, which trades on the ASX, owns that 100%. Moss and Gold, of course, owns 51% of that company. And so I will speculate that Mawson's market cap, despite being up, some 70% over the past week or so, largely on the heels of those results, the market cap for Mawson, just based on its 51% ownership of SXG, and there's other projects in that portfolio, is probably half of what it should be, given the fact that I think, Sunday Creek is turning out to be a very, very special high-grade multi-million ounce deposit that seems to be open on all ends and at depth with just phenomenal grades. So keep an eye on Moss and Gold. I think if you're looking, and I've been saying this before, I said it when it was 12 cents and 15 cents. It's closer to 30 cents now. But even then, with a market cap of 65-ish million, heck of a gold speculation if you want some torque in this market. And oh yeah, by the way, they have some other assets in their portfolio that also have, multi-million ounce potential in other parts of the world. One of the best technical teams out there. Michael Hudson's one of my favorite people in the space. So give Moss and Gold a look. We'll be catching up with them in Beaver Creek later next week. This week, by the time that you all read and see this. Let's pivot real quick. I want to talk the critical metals. Rare earth prices are up to highs not seen in years, right? They're up some 38% here. 20-month high.
NdPr you're talking about?
The rare earths?
Yeah, and NdPr? Like, are you talking about?
I mean the actual metals, just the basket of the 17 rare earth metals.
Got
it. Yeah. They're up to 20-month high. Myanmar, right? Well, one of the major producers suspended production. They have some inspections coming up. A lot of speculation there, but the bottom line is we've talked about China potentially weaponizing the rare earth space with critical metals becoming such a strategic and significant part of this global Cold War that I think we're already engaged in with China, Russia, Japan, and us on the other side of it. But watch the rare earth space. It's getting really interesting. The metals, the prices are getting real interesting. It's curious to me to see what happens over the next coming weeks and months. And then look, we talk lithium almost every week here. We absolutely have to, because no matter what Kathy Wood tells you, lithium is going to continue to run. And if for anybody that believes this bottoming in the lithium spot price and this recent consolidation is going to be prolonged, I would defer, not to me, defer to the experts. The experts are the Albemarles of the world that need the inputs, right? They need the chemicals, they need the supply. And they just made a third bid for Liontown Resources, a bid now up to $4.3 billion or $3 per share in Australian dollars. And so, they started at 220 and they came up all the way to 3. The interesting thing to note there is that the stock actually traded above that level in the latest trading section on the Australian exchange. And so I'm curious to see if there's another suitor that wants to come in and maybe take it. I know Albemarle is not going to be happy, and I doubt that they sit, on hands and knees and allow that to happen after being so aggressive and working so hard on the deal. But I've said it before, I'll say it again. Paying subscribers, you already know my thoughts on the coming lithium bidding wars. It's going to be real nice to own a tier 1 deposit with great infrastructure, simple flow sheets, low-cost energy inputs, neutral energy inputs, and likely what's going to be probably, the biggest or second biggest lithium deposit on the planet here in short order. So my way of saying keep an eye on Patriot. Also, a lot of downstream action that a lot of the better explorers that have significant success are going to be able to enjoy. So plan on squeezing that orange as much as I possibly can. Any thoughts there, Nick?
I love squeezing oranges. I think Benchmark was out with some updated lithium forecast this week. That's what I was frantically Googling for, but I didn't get there in time. If memory serves, it was something like we need 5 to 6 times the amount of lithium production by 2030 than we currently have now. And so, not going away. All the fundamentals remain in place, and we can continue to see announcements from the battery makers and the auto manufacturers about building new plants and needing to secure more supply. And so market's been soft. Market sent Albemarle down actually on that deal. I think it's at near 52-week lows. Last time it was there, I was telling you I was a buyer. And I've been seeing articles about it, Albemarle being a potential value trap. I'm not sure that's the case as the leading lithium chemical producer in the world, given the demand that's slated for the next couple of years. So, no, good for the sector. It consolidates the sector and should likely beget more consolidation in the coming months as these larger chemical production companies, either not integrated or integrated, need to grow their production profiles, grow their asset base, and they get ready to supply the lithium that the world is going to need for the next couple of decades. I seem to have lost my partner there, Mr. Del Real. So I'll carry on my own. The topics we had listed here were about the Texas grid, which is back in the news this week as they had extremely high temperatures, and there was warnings coming from the grid that essentially renewables weren't making up the difference, didn't have the capacity factor, and so they were firing up their natural gas plants and coal plants and nuclear plants. Obviously, coal and nuclear still making up the majority of that backbone there. This problem of outstripped supply for the grid is not going away, and not just in Texas. We've seen this in other places, and certainly as there's going to continue to be stresses on the grid and higher temperatures and extreme weather events. It's 100 degrees on the East Coast, for example. I was talking to a family in Maryland this weekend and watching the U.S. Tennis Open in New York, and it was over 110 degrees on the court there. And so these pressures on the grid are going to continue, and it's one reason why lithium is going to continue as we seek to do energy storage increasingly, and one reason why nuclear is going to continue to be in the mix with the number of supporters it has actually growing. Worth mentioning, I guess, is that John Kerry is now on board with nuclear and is on a world tour touting small modular reactors and how they can be beneficial in the fight against climate change and decarbonization. So growing proponents of nuclear, just the latest there, uranium prices remain over $60, and we've got utilities coming into the space to contract, which is a good thing. So we remain bullish on uranium. What else is going on out there for us this week? I was going to talk about universal basic income because I've written about it from time to time over the past couple of years and continue to be not necessarily a proponent, but or an advocate, but maybe a quasi-believer in a UBI and how it can alleviate some of the wealth disparity in this country and some of the homelessness problems that we're experiencing in North America, not just the U.S., but increasingly in Canada as well. And, we often search for what are the solutions. Well, one of the things I've said is, giving money to people if the housing is a function of not having money to pay for housing. Giving money to people might be one way to combat that. Of course, having more houses is another way, but let's set that aside for a second. So, especially in the context of all the money that we create out of thin air for, all the other things, the defense budgets and the entitlement programs and the giving to the Ukraine, for example, and we know how it's created, right? I mean, whether it's for Nike on 60 Minutes or Jerome Powell talking about, how they essentially, create money out of thin air. If we could do that, it seems like one good use might be getting people off the streets and eradicating some of the wealth disparity if we can just create the money out of thin air. And so a study caught my eye this week out of Canada. It was a 12-month study where they gave 50 people $7,500, no questions asked. There's a stipulation that you had to be homeless, previously homeless for 6 months, and you weren't dependent on the substance. You weren't a drug addict. And they gave 50 people $7,500, and then there was a control group. And I guess I could just read you some of the results, but the bottom line was that it worked. It says not only did those who received the money spend fewer days homeless than those in the control group, they had also moved into stable housing after an average of 3 months compared to those in the control group who took an average of 3 months. And equally as important is that it saved money. Let me get to that section of it. So it costs on average $55,000 a year for social and health services for one homeless person. According to this study data, where they gave people $7,500, the project saved the shelter system approximately $8,100 per person, for a total savings of $405,000 over the year for those 50 people. So I talk to people about this, right? I talk to friends, colleagues, and they, depending on where they are in the political spectrum, depending on where they are on, how they feel about taxes and government, they have different, initial responses. And the more I talk to them, the more I say, yeah, but we just create money for all sorts of other things. Why don't we create it for people? And the more I talk to them about it, I can get people to warm up to the idea. And so I'm not saying let's implement this right now, but I am saying let's study this more and see if we can bear these results out on a larger scale. And I realize it doesn't solve the underlying, mental health issues, drug issues, housing shortage issues, but if it does get these people off the street and save the shelter program's money, then it seems like one avenue that we can pursue. What else this? Yes. I'll just share a story and talk about some recent news in Pennsylvania where there was an escaped convict who there's a manhunt for. His name is Danilo Cavalcante, and he escaped from a prison outside of Philadelphia by shimmying himself up two walls. There were two walls that he was able to put his feet on one and his hands on the other, and shimmy up the walls and over. And he's been out for something like a week and a half or 2 weeks. They spotted him a couple times, and it hits relatively close to home because one of the places they spotted him was at a place called Longwood Gardens, which is an arboretum of sorts, different gardens and outdoor exhibits, plants, etc. It's like 45 minutes north of my parents' house. So I just been watching this story. It's very interesting. You don't have a lot of escaped convicts in 2023, and this one is grabbing some national news. But it made me think back when I was a kid, in the same area, we call it the tri-state area, at the northeast corner of Maryland, where it meets the Delaware and Pennsylvania. That's where this gentleman is currently running around. But when I was in high school, there was another escaped convict, and this story brought back to mind the escaped convict that we were dealing with when I was in high school, and he was quite close to where I grew up in Cecil County, Maryland. There's this gentleman's name was Norman Johnson, by the way. He was in prison, and this was in 1999. He was in prison for a quadruple murder, which they actually made a movie about that starred Sean Penn and Christopher Walken. The movie was called At Close Range. Well, this gentleman, Norman Johnson, he escaped from prison in 1999, and it was rumored that he had some stash or cache of treasure or funds buried somewhere in the county where I live, specifically at a place called Fair Hill Natural Resource Center, which is like a 5,000 or 6,000 acre preserve that's like 2 miles down the road from where I was. So I can remember 1999. I would have been 16 years old, sophomore or junior in high school. I remember this going on. It was August. It was summertime. I remember my grandfather and my dad having their guns loaded or whatever it was. And ultimately they found this gentleman. They cornered him like a mile north of the Delaware border, and he gave up after like a 2.5 week search and just said, I'm tired. Like, you guys got me. I'm ready to go back. It's constantly being on the lam, on the run. And I have to imagine that's what's going on with the current escapee, the Danilo Cavalcante, because, they've got the helicopters out at 24/7. He's being pursued. You can't imagine how long this is going to last, given the technology available in this day and age to track and pursue people. And so hopefully he doesn't harm anybody. And obviously we don't want any additional injuries or certainly deaths. But it makes for a very interesting story, something different outside of the aliens and then all the stuff that we've seen in 2023 to get an escaped convict story that we can follow along with as a nation. So if you haven't seen that one yet, do give a second to Google it and check it out. And then the last thing I guess I'll wrap up on, because we said we were going to keep it short, is Beaver Creek. Like Gerardo said, we'll be there next week. There's a Precious Metals Summit that goes on there. It's a good conference, lots of one-on-one meetings, lots of gold, silver, copper companies in attendance, lots of camaraderie, and lots of talks at the bar after the meetings as well. So we'll be there. We'll be shooting interviews with the sponsor companies from Resource Stock Digest that are in attendance. So do look forward to a dozen or more new interview videos from Resource Stock Digest in the coming weeks after we get back and start getting those edited and produced. But what we wanted to ask for was questions. Maybe we'll put a link to the exhibitors in the description of this video, and please do submit questions in the form of comments on this video. What companies are you interested in that are going to be there? What sort of questions would you like to ask them? And is there any in particular that are outside of Resource Stock Digest or the ones that we typically talk about that you have an interest in? So please do submit your questions in the form of a comment below this video, and we look forward to checking them out. And then next week, we'll record this podcast from Beaver Creek as we typically do every September. So It'll be a video. Me and Gerardo will be in person, and hopefully we can talk about some of those questions and comments that you put below this video. Gerardo just messaged me. It sounds like he was having internet connectivity issues. It said it kicked him out, and he was not able to get back in. So sorry for the technical glitch. Sorry you had to hear my soliloquy there for a little bit, but next week we'll be together, and we will be in Beaver Creek, and we look forward to discussing precious metals companies with you then. Until next week, I am Nick Hodge for my partner Gerardo Del Real, and go to Daily Profit Cycle, sign up for the free letter there, check out Resource Stock Digest, look at the publications at digestpublishing.com, and of course be sure to like this video and subscribe to the Bizarro World channel. This has been Investing in Bizarro World number 235.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.